Hey guys, Daniel here and welcome back to another video. Here today we're going to be looking at HITI's Q1 2021 earnings results. They just reported these a couple days ago, and in these videos I thought I'd take a look at them with you guys and really give my opinion as to exactly what I think. If you don't know what HITI is, by the way, it's a company that, is my play in the cannabis industry, and if you want to learn more about it, check out the first link in the description down below. That'll take you to my full stock analysis video on HITI, where I go exactly through what the company is, does, and the path I see for it over the next 5 years. This video is going to be strictly on this most recent earnings report. Here's an overview of what we're going to be talking about in this video. Firstly, earnings highlights exactly what they reported, my opinions on that, and future growth expectations. Next, we'll look at some price targets, exactly where I think HITI will be trading at 5 years from now, given my growth and profit projections. And then lastly, we'll look at, what I'm doing, what HITI makes up as a percentage of my portfolio, and what I'm planning to do with it over the long run. So I hope you guys enjoy this video. This is very important to note here. When we look at HITI's fiscal calendar, their quarter one is November, December, and January. This is very different from the normal Q1, which is January, February, and March. So just so you guys know, when we're talking about quarter one here for HITI, we're talking about the revenue and the profits that they did in November, December, and January. So let's get into it. So here we have earnings highlights. Revenue increased by 179% to $38.3 million this quarter, up from the $13.7 million they did in the same quarter last year. Now, this is due to three primary factors. One, the continued expansion of their retail physical locations all across Canada, Alberta, and Ontario. Secondly, the continued expansion of their e-commerce websites, where you can buy cannabis products or cannabis accessories. And then lastly, the incorporation of the acquisition of Meta Growth Corp. This is another cannabis dispensary company that HITI acquired in the back half of 2020, and we're just starting to see the revenue from that acquisition start to flow into HITI's actual revenue report. When we look at gross profit, we see that it's increased over 200% to $14.8 million compared to the $4.8 million they did in the same quarter last year. So what's interesting about this? Revenue increased 179%, while gross profit increased well over 200%. So, obviously, the gross profit margin increased to 39% from the 35% they had last year. So not only are they growing at a massive clip, but the profitability of that revenue is actually increasing alongside that. Now, with my projections, I have gross profit margins sitting right around 40%. And, given these numbers here that we got today, that might actually be pretty dang conservative from a 5-year outlook. It would not surprise me for HITI to be a business that, potentially has 45-50% margins 5 years down the road as they continue to expand and really focus in on profitability. When we look at adjusted EBITDA for the first quarter of 2021, we got $4.6 million compared to negative $800,000 for the same quarter last year. So again, that continued increase in profits and adjusted EBITDA in this case. Geographically, when we look at where their revenue comes from, around $34 million comes from Canada. That's to be expected. Canada is their main market. All of their physical dispensaries are located in Canada, so it makes sense for a majority of their revenue to come from Canada. But what's surprising here is the amount of revenue that's coming from the United States. $3.9 million. Right around 10 to 15% of their revenue comes from the US, despite not having any physical dispensaries in the United States. All of that revenue comes from their e-commerce platforms, Grass City, CBD City, variety of different e-commerce sites that they own. $200,000 comes from internationally. Again, that's all e-commerce revenue. So, despite only having an online presence in the United States, we see a significant amount of revenue coming in from there. Now, although they don't have physical dispensaries in the United States as of today, I think that could be a major growth driver for them, potentially in the back half of 2023 to 2025. Now, when we look at it segment-wise, $38.6 million or $36.8 million of their total revenue generated by retail. Again, that makes sense. That's their online platforms, their physical dispensaries, and $1.5 million came from wholesale. Now, the cannabis accessory part of HITI's business is very vertically integrated. They essentially make those products. They make the cannabis accessories. Now, all of those cannabis accessories are sent to their dispensaries, their e-commerce sites, but, partially, or part of it is actually sent directly to wholesale, to other cannabis dispensaries or other cannabis cannabis companies. So that's that $1.5 million in wholesale revenue, an immaterial amount from corporate, but a majority of it is coming from their online presence and their physical presence throughout Canada, United States, and internationally. Cash on hand now sitting at around $33 million, up from the $16.6 million they had in January 31st of 2021. So the company is very well positioned from a cash standpoint to continue operating, growing, and that really minimizes a lot of risk from a bankruptcy point of view. When we look at net income, and this is why the stock dropped in my opinion, we had negative $16 million in net income. And the reason behind this is, because of an accounting kind of like a trick or something along those lines. A few years ago, they issued warrants where, they sold warrants to a certain company. What a warrant is essentially the right to buy a share at a certain price at a certain date. And, the stock price has obviously done phenomenally over the past few months, or from the period of November to January. So the value of those warrants increased significantly, which is why we saw, somehow that translates to negative net income. Now, eventually those warrants will expire, and although the company isn't forced to pay $16 million, the worth of those warrants does increase by $16 million. So again, this is a bit of an accounting kind of gimmick. I don't know exactly what to call it, but it doesn't mean that the company has to pay this much. It's just showing up on the balance, or not on the balance sheet, but on the revenue statement for a variety of reasons. So when we look at a NASDAQ application, this is a very positive thing that a lot of people are looking at. They've filed their application to list on the NASDAQ. We'll see if it ends up getting approved or not. But from what I heard on the conference call, they're very positive about this. And if they do eventually get approved onto the NASDAQ, this could be a very good kind of momentum driver for the stock over the next short term and over the long run, as it exposes High Tide to more larger potential institutional investors and really in getting their brand name out there. Now, again, if they don't get listed on the NASDAQ, it's not the end of the world. I think that, even if they don't get listed on the NASDAQ, the business fundamentals will be there 5 years down the road to justify a higher stock price, in my opinion, obviously. But, this would obviously be very good for the stock price over the next few months if this does end up going through. So next thing I want to cover here is the revenue that High Tide, or revenue growth that High Tide has experienced into 2021, and the revenue growth that they're experiencing into 2021 and 2022. Now, we've seen phenomenal growth for High Tide up until during 2020, despite a pandemic and Canada being essentially in lockdown for a majority of 2020. We've seen revenue go from $31 million to $83.3 million, and keep in mind, this is during a time where a majority of dispensaries are potentially shut down, or potential capacity is decreased. From what they've said, they're essentially all of their dispensaries are limited to 25% capacity. So into 2021 and into 2022, as more and more people get vaccinated, and as we start to recover from this pandemic, we're really going to start to see a pickup essentially in revenue per store, which is, again, very exciting, and in my opinion makes High Tide an actual COVID recovery play. So that on top of, continuing to open new dispensaries throughout 2021 and 2022, I think that's a major growth driver or revenue driver for the business going forwards. When we look at Smoke Cartel, this is a company that High Tide acquired a couple of months ago. We've started to recognize their revenue a few weeks ago. And, in this report, revenue is yet to be recognized, but I think it's in Q2, Q3 of this year where we really start to see the revenue come in from Smoke Cartel. If you don't know what they are similar to a Grass City. They are an e-commerce cannabis accessory company. So now, when we look at High Tide, they own the two largest cannabis accessory e-commerce platforms in North America. So that obviously increases their total addressable market in that space by a significant amount. High Tide now has 80 stores open all across Canada. They organically opened 8 in March. That is the most dispensaries they opened in a single month in the company's history. So, we're seeing huge growth when it comes to, their retail, the physical dispensaries. And, when we look at a map of Canada here, a large majority of their retail or their physical presence is in Alberta. But in my opinion, Ontario is the next kind of place for High Tide to step in and will be one of the big places or, potential growth drivers for High Tide over the coming years here. Here's why. When we look at Ontario, High Tide currently has right around 15 stores. So, right around 20% of their total stores are in Ontario. Now, there is a 30 store max in Ontario. Essentially, a company can only have 30 dispensaries in Ontario. Now, High Tide said that they expect to hit 30 stores in September, which is convenient because at that same time, that 30 store cap increases to 75. So we're going to see a lot of stores increase, or a lot of new stores opened throughout 2021 to get to 30, and then in 2022 we're going to see them I'm expecting them to hit that 75 store count number. So I think Ontario is potentially a big growth driver for High Tide into 2021 and into 2022. Next thing I want to cover here for you guys is my price targets on High Tide and my projections. When we look at the company's projections here, they're saying around $186 million in 2021 and $270 million in 2022. This was issued a couple months ago. I'm going to be honest with you guys. I think they're very conservative with these numbers. Here's why. When we look at their most recent earnings report, they did right around $38.6 million in revenue. If we round that up to $40 million, they're currently at a $160 million yearly revenue run rate. Now they're expecting $186 million in revenue. Keep in mind, we have another 15 stores that need to open in Ontario. We have continued expansion throughout Alberta. The company said that they expect to hit over 100 stores all across Canada by the end of 2021. We have the tailwinds coming from the recovery of the pandemic. And then we also have revenue yet to be recognized from the smoke cartel. So all of those things combined, I think High Tide is actually being very conservative with these numbers here, and I think 200 million is pretty dang realistic for them to hit in this year. Now, when we look at next year, I think they're also being conservative, based on the fact that Ontario cap limit, so-called cap limit, is set to increase. I think that also aided by the recovery of the pandemic, I think they'll be able to hit $300 million. If you disagree with any of these points, make sure to check out the link in the description down below. I will have a link where you can actually access this spreadsheet, download it, and play around with these different numbers here. And then I have a 35% revenue growth number for the next 3 years after 2022. This does imply partial expansion into the United States, not too much expansion, but again, the CEO has expressed a strong desire to expand into the States, and I really think that it's just such a big untapped opportunity for a company like High Tide to potentially step in, especially with their Canna Cabana brand, potentially down in like a California or a Florida. I think that would do phenomenally there. When we look at gross margins here, I have them sitting at around 40%. They're currently at around 39%, so that might actually be conservative. And then when we look at operating expenses and taxes put together, I have that at around 32%. Currently, their general and administrative expenses are right around 25%. So, currently that's around 7% of total revenue going to taxes, but we can expect that general and administrative expenses to, potentially decrease over time, or we can expect gross margins to increase over time. So that gives us a bit of leeway when it comes to those taxes. We don't really know what they are as of right now, as the company hasn't really reported any positive quarters for net income. But as time goes on, we'll get more clarity with that. When we look at a net income margin, that gives us around an 8% net income margin, meaning $100 in revenue translates to $8 in net income. Now, the company expects to hit an EBITDA margin of around 15% within the next year or two. So again, that goes to that 7% for taxes as of today, but as time goes on, I think we have a bit of leeway there as gross margins will increase and expenses will, in my opinion, decrease along with that. Then that gives us around $60 million in net income by 2025. You slap a 40 price to earnings ratio on that, which in my opinion is justified for a company growing at the rate of High Tide, and you get a market cap of right around $2.3 billion or a share price of just under $4. So you can see the different upsides here percentage-wise, 36% per year compounded over the next 5 years, or a price upside of around 361%. Now, this isn't guaranteed, obviously. Things could change with High Tide to the benefit or to the worse, but this is kind of where I think is realistic for High Tide over the next 5 years here as they continue to expand and as the cannabis industry continues to expand as well. I'm really excited about the future of this company, and it's very surprising to see the share price actually decline so significantly, or maybe not significantly, but the stock definitely opened up, right? It opened up right around that 73 cent mark, and then it dropped to 66 cents. So, if I didn't have a position in high tide, I'd build mine out. Currently, I have right around 7.5% of my portfolio in high tide. I'm willing to hold this thing over the next 5 years here as they continue to expand. And I'm not selling in the short term here. I think they have a lot of untapped potential in the e-commerce side of cannabis and the physical space of cannabis. And I think Ontario presents a very attractive opportunity for them. So let me know what you guys think in the comment section down below about high tide. I really like this opportunity over the long run, and I think this earnings report was very underappreciated by the market. We'll see what happens in the coming days here. But if you like this video, make sure to drop a like. Thank you so much for watching, and have a great day.